Well, good morning, folks. This is Billy Trout with the Tennessee Department of Revenue's Taxpayer Education Section. And on behalf of our Commissioner, David Geragino, and our staff in Taxpayer Services and our Audit Division, we'd like to welcome you to today's presentation on family-owned non-corporate elections or FONCE exemptions for franchise and excise tax. With me today, I've got a couple of great experts. We're glad to have them on board. Miss Andrea Fields is here from our Taxpayer Services Division. So welcome, Andrea, as well as Charles Roach in our Audit Division, who looks at quite a few of these exemptions and will be able to talk us through some of the more intricate areas that we deal with. So we appreciate you being with us today. We have a lot of people still joining us. And also I want to introduce to you, if you haven't been to any of our webinars before, our Assistant Director for Taxpayer Services, Dan Vinson, is available here, and he'll be monitoring chat today. So we'll talk about a few housekeeping items here before we get going. We do have the materials here for you. Let me advance the slides here real quick and show you a couple of things. Audio settings, you can see here on the screen here. If you're having trouble hearing me right now, you'd probably already know that, but leaving and coming back would be one thing to do. We do record these presentations, so they'll be in our taxpayer education tax webinar library, and we'll have that posted either this afternoon or tomorrow morning. If you need CPE credit, at the end of the presentation, when we cut off, you'll be sent over to our CPE link for you to put that information in there, and we'll be good to go on that once you do the survey. And don't forget to get your name exactly like you wanted it to appear on the certificate. Okay. You see also a QR code that we have here for you. So if you want to scan that with your phone, you can link over to the PDF to be able to get the material, and we will also post the link in chat here as we go along here later on, so you guys will have that information. So with that, I think that pretty much covers the housekeeping stuff. So we'll spend a few minutes kind of talking about this exemption with you and walking you through some of the basics. And again, Andrea and Charles, appreciate you being with us today, and thanks for volunteering. I'm laughing because y'all should be laughing too. We don't really get volunteered a lot. We sort of get, well, I guess we get volunteered, but anyway, you're here and you're appreciated. How about that? Okay.
Thank you.
Thank you for having
All right.
us.
Oh, anytime, anytime. All right. So just a recap here real quick about what we'll be talking about today. The Tennessee Franchise and Excise FONCE exemption does allow qualified entities to be exempt from our franchise and excise taxes. So our topics today is just going to be about the qualifications and what do we mean about family owned? What does that mean? You know, very important part of the FONCE exemption for obvious reasons. Passive investment income, how that relates to it, as well as rental property. And as you can see here, farm and residential property registration and renewal, the mechanics behind some of that stuff, and then as always, resources. How can you get more information about this exemption and franchise and excise taxes in general? So with that, we'll just keep on going and looking at a few things and start off with the qualifications. So like any of our procedures and policies and things like this, all this stuff is based in law as passed by the Tennessee legislature. So the law for this particular law is Tennessee Code Annotated 67-4-2008. And basically in the subsection A11, it talks about what the FONCE exemption qualifications have to be. Okay, so as you can see here, it does require that a qualifying entity be a limited partnership, an LLP, or an LLC, and at least 95% of the ownership units of the entity have to be owned by members of a family. And we're going to talk about what that means here in just a few minutes, okay? Additionally, at least 2/3 of the activity of the entity is going to have to be from forming or holding one or more personal residences where one or more of the members resides. That's important there too. Or if substantially all of your activity of the entity is producing passive investment income or a combination of the production of passive investment income and farming. So there's a farming element to this as well too for some people. Okay, but those are the qualifications. Charles, Andrea, did I miss anything on that? Does that sound pretty good to you?
Nope, sounds good to me.
All right. We'll just keep on motoring through. Okay, so we mentioned on the qualifications, what's family and what's that mean? You know, who's in your family? You know, that's a tricky question if you really sit back and think about it. So again, with the law, it says that at least 95% of the ownership units of the entity have to be owned by the members of a family. So what does that mean? It means to an individual, it would be an ancestor of such individual, the spouse or a former spouse. Even former spouses are included in this as well. Lineal descendants, which sort of makes sense as well, or a parent of a lineal descendant would qualify too. And then the spouse or former spouse of any lineal descendant. Also estates and trusts, as it relates to deceased individuals who was basically one of these qualifying individuals when they were alive. And then also legally adopted children are treated as the same, just the very same as a child that is a blood relative. Okay. So if those qualifications are met, then we're going to consider that to be family owned. That's the first two things in FONCE, FONCE, right? Okay. That's family owned. So an element of this potentially relates to passive income, passive investment income. So what does that mean? That means things that you do that you're not actively engaged in, like the operation of a business is not passive, okay? But gross receipts derived from royalties or rents from that residential property or farm property, like we mentioned before, as well as dividends, interests, and annuities, and stock gains, you know, with those capital gains and things like that. Those are they're passive income, not actively involved in the operation of a business. So those are things to consider when you are making application for or renewing this exemption. Okay. All right. Just want to talk for a second about rental property and passive investment income and what some of these definitions mean. So talking about rents, rents relative to passive investment income include only the rental income from residential or farm property. So if there's other types of renting involved with the entity, like renting tangible personal property, that's not part of that as far as that goes too. But also ownership units that are held in trust and not treated as owned by members of the family unless the ownership units are properly part of a trust that's part of an estate of a deceased person described in there are should be considered as well too. I was wondering, Charles or Andrea, if you had any comments about rental property or anything relative to this and the definitions that are stated here.
As far as the trust goes, Billy, the terminology I think they use is a testamentary trust.
Uh-huh.
Would be the type of trust they're talking about.
Okay.
Uh,
Do we see a lot of that, Charles?
we do, yes, yes. And we do see some living trusts that do not qualify, or revocable trusts. But the type of trust that does qualify is considered a testamentary trust.
Okay, very good. And we're going to talk about the application and renewal process in just a few minutes too, and why it's important to be really descriptive in any of the information that you provide to us when we're reviewing your exemption request. Okay. All right. Thank you for your comments on that. So again, farming or residential property can be involved on here. So looking at a couple of things here on this particular slide, Um, Farm property and residential property really have the same meaning, except that residential property includes only the property that's leased or rented for residential purposes. So if it's not used for residential purposes, you're not going to qualify. And it can't be more than 4 residential units at that one location. And they give an example here about 4 separately deeded condominium units within a building with over 4 units. It would qualify in that particular example there too. Um, Farm property doesn't include any acreage used for any recreational purposes. So it's going to need to be used for a farming purpose. So they give an example about golf course. If you were to convert your farm to a golf course, that's not going to qualify. Okay. So that's pretty much the issues relative to that. Okay. All right. So getting into the registration and the application part of this process too, there's a form that is required for this. It's called an FAE 183 application for exemption for the annual exemption or the actual renewal of that exemption. And of course, you obviously have to meet all of the requirements in order to have your exemption approved. And then in red here, we've put if the entity does not meet the exemption requirements in any given year, you are taxable for all activities during that year. So a franchise and excise tax return would be required as stated here in this third bullet. And we would have to have that filed and paid by the 15th day of the 4th month following the close of the tax year. Yeah, super important to get the registration correct and to be timely too. We'll talk about some issues here in just a little while and kind of make sure you understand that a little bit better as well. Okay. All right. So you have to renew this exemption every year. And you can do that on this form 183 as well. You can also do it electronically, which we'll talk about here in just a few minutes as well too. All right. So you need to do this by the 15th day of the 4th month, which for a lot of you using a December tax year ending period is going to be April 15th. So we do need to have these done on time. And it does say that entities requiring an extension for federal income tax are automatically granted an extension. Show you an example of that in just a second that Andrea gave us when we were preparing for this webinar. That was a really nice thing to put out there. Okay. Also, again, you do have to submit these on an annual basis. And as it says in red at the bottom, if you use our 10-tap system, our electronic system to submit your application and your renewal, it's much quicker. Okay. And we're trying to be as efficient as we can because as you can imagine, we get the loads and loads of requests for information, particularly this time of year. So you helping us by doing it electronically is a super benefit. Okay. This is what Andrea had told us about. And Andrea, you feel free to comment on this as well, if you would. Um, if you're filing the form 183, you do need to, indicating that you have a federal extension, or if you're doing this actually on the 10-tap system, make sure that you're noting either physically or electronically that you have filed for that federal extension, which it says here on the slide. So, Andrea, I was wondering if you wanted to comment on that in any particular way.
Yes, absolutely. When you're submitting an extension for federal, you've been granted a federal extension. It is important that you select the option on the FAE 183 that you have been granted the extension. This will prevent you from receiving a penalty of $200 for late submission of your FAE 183. This box is available on the paper version as well as on the online version. There's just a small check box that just you want to just make sure you check the box there.
Yeah, okay, that's great information, and certainly you mentioned the $200 penalty. So what we find, and Andrea can agree with this, and maybe you see it too, Charles, a little bit, but we do in taxpayer services. We do send out notices, and it's quite a shock when somebody receives a notice saying they owe $200 and they say, well, I've got a federal extension. Well, did you tell us you had a federal extension? Maybe you didn't. If you didn't, okay, Andrea and her folks are able to look at things, and Charles can help too in audit, I'm sure, as far as that goes. And we can see about the penalty part of it, but letting us know up front prevents that penalty from happening. So that's what's really important. Okay. All right. So let's keep on going. So we do have our resources available on the website here. We have the form and the tax manual, and then we also have our franchise and excise tax return, and then of course the code section as well. You can go on our website at www.tn.gov/revenue, and you can get to all of these resources, and particularly looking at the franchise and excise tax section of the actual presentation, or not the presentation, but of the website. Excuse me. I don't know what I'm talking about. Okay. All right. So that's really pretty much it. We do have an opportunity now to entertain some questions. We'll go ahead and open up the chat here in just a second here. Give us just a second. But I was going to ask Charles and Andrea a couple of questions here while we're bringing up chat. Um, what do we see as the biggest mistake that people make when they're filing either for the exemption um, or for the renewing their exemption? I wonder if you could comment on that.
Speaking for audit, I would say the most important thing for us, or what we see happens a lot, is the disclosure of activity form does not get completed fully. So it's really important to look at that closely. Something as simple as listing the member's name and not listing their relationship. If it's more than one member, since it is a 95% family-owned requirement, we do need to know how the members are related. And as you go on through the form, making sure to list the passive or non-passive income, and of course, dividing those up appropriately to see if you meet the 2/3 income test or not. Listing the addresses and the county that they're located in so they can be verified that they do qualify. And if that is completed properly, it's a good possibility that audit will not have to request any information and can review the exemption and see whether or not it qualifies.
Okay.
Yeah. And from a registration standpoint, just the basics, just ensuring that the application has the entity's name, the EIN number, the franchise excise account number. If your entity is registered with Tennessee Secretary of State, you want to be sure to include the control number as well on your application. Just if it's a new exemption request, be sure to select the box stating that it's new. And of course, if it's a renewal, you want to select that it's a renewal. Just anything to prevent those additional delays in processing, or as having to send out letters or contact you to get a corrective form. Just to make those corrective steps ahead of time.
Okay. That's a great answer. Very thorough. Thank you very much, guys. So from a numeric standpoint, what do you think most of the issues are caused by? If we could eliminate like one or two things, what do you think one of the things would be? Or do you have an answer?
Let's see. So we could eliminate. You may have to rephrase the question.
I was just going to say, from when we're dealing with hundreds of requests and things like that, is it a situation that we can knock out a lot of these, but do you see people doing the same thing all the time? In other words, we talked about the biggest mistake before. Is it just basically the same thing you talked about before?
For us, yes, it's a combination of the DOA page, the disclosure activity page not being completed, just leaving out one element. One other thing I might mention regarding the disclosure of activity page is there are 3 parts to that. So really part 1 is the only thing that applies to the FONCE. So occasionally we get a taxpayer that applies for the FONCE, then maybe they complete the Part 2 farming, which is actually for the farming exemption. There is a farming component to the FONCE, but you just need to be aware that there is a difference, and you need to be aware of which exemption you're trying to qualify for and which part you're actually completing.
Mhm.
Right, right.
Right.
Um,
And just to
I'm
To
sorry, go ahead,
piggyback off,
Andrea.
well, just to piggyback off what Charles is saying, just incomplete forms, that is the biggest takeaway. Just to make sure that your form is complete, be sure that you select the fiscal year that you're requesting the exemption for, as we do have to deny exemptions if we are unable to determine what year you're requesting the exemption. There's a drop-down box on 10 tab that you can select the year. If you're doing a paper version, of course, you want to write the full year when you're requesting the exemption. That would be just my takeaway, just to pay attention to that part of the exemption request as well.
Yeah, great as far as that goes too. I do want to mention one thing here real quick so I don't forget to. There may be a change in the law relating to FONCE exemptions. We've seen some things kicked around in the Tennessee legislature for this particular session that could change a couple of things. But at this particular time, while we're recording this webinar today, we won't have any of that information because obviously it's not law yet. But when we do have a change in law on our website, we do actually have a section called legislative updates. And you can go out there and click on that information and you can receive the most up-to-date information. We'll also publish important notices and things of that nature that let you know about these changes, and of course any changes in the future about the way that you either apply for or would apply for a renewal for the exemption. We would update any materials relative to that as well. Okay. I think we have a couple of chat questions coming in now, so thank you guys for all your chat activities too. Short-term rentals has been brought up as potentially qualifying here. Do you, Charles? What do you think about that? If I had short-term rentals involved, is that going to be something that would qualify for a FONCE potentially?
Yes, yes, it would. Short-term rentals do qualify, providing it's the structure itself qualifies, again, 4 units or less on a deeded property, and that it's being used for residential purposes. It would absolutely qualify.
Okay, very good. Very good. So and there's a lot of that goes on. Obviously, that's a big thing, not only in Tennessee, but really across the nation with families investing in these short-term rental properties and that sort of thing. So it's good to know that they might qualify for that too. Um, Looking through some of the other chat things, I don't know if you guys are looking at it as well too. Great grandchildren, would that be one of the qualifying relatives? What do you guys think about that?
Yes,
Still a lineal relative, right?
yes.
Okay, perfect. Perfect. By the way, guys, we appreciate your chat questions. We know that we won't get to all of them in this session today because of the number of them, but we're going to give you an opportunity to be able to submit your question to us so that we can have an expert address that for you later on too. Um,
Here's a good question here I see, Billy.
yeah, tell
Um,
me.
When completing the exemption renewal on 10 tap, does a taxpayer receive a confirmation or a renewal when it's approved? So unfortunately, when you submit the exemption renewal on 10 tap, you will receive a confirmation that it's been submitted to our office, but it does not give you an update if it's been approved or denied. So my recommendation would be is once you process your exemption through 10 tab, give it maybe 24 to 48 hours for processing and then contact our F&E registrations unit just to get an update to determine if it's been approved. Okay. You could also monitor it through 10 tab. If the exemption is approved, usually that period will show as not required. So the F&E 170 return will show as not required because the 183 has been approved. But again, you could always just contact our unit just to ensure that it has been approved, as we don't send out letters for renewal exemptions, unfortunately.
And I just typed in the chat the phone number for the franchise and excise group, your group. And
Thank you.
yeah, and by the way, if you call on April 15th, guess what's going to happen?
Please be patient.
You're going to wait a long time. So think ahead and let us help you get through all this stuff a little quicker if you don't mind.
Yes.
So we appreciate you being diligent, but also being timely with different things. Thank you. A question came in from Joe about living trust and grantor trust ignored as entities for federal tax purposes. What's the tie-in for that for fonts? Do you have any comments on that, Charles, or anything?
The only tie-in for the fonts for when it comes to trust is as I mentioned before, the testamentary trust. That's the only thing that would actually qualify for their fonts. There may be other tax implications on the FAU 170 or outside of the fonts, but that's the only part that I really can answer regarding the fonts.
Okay. All right. Fair enough. Here's a question from Greg. He said his wife and him formed a new Tennessee LLC in October of 25 because they inherited some farmland. And they really haven't had any activity yet on that. And the title actually of the farmland passed to them in 2026. For 2025, would they need to do a FONCE exemption, or what do you think about that 25 tax year?
Does it mention when is it an LLC that we're discussing?
It is an LLC. Yep.
And they were formed in 25?
Uh-huh.
And there was no, if I understood the question, there's no income. So by law, no income would qualify for the fonts.
Okay. Well, great. That'll work out for them. All right.
There's another question here from Joy. I can't speak today. Joy Black. If an LLC failed to register for an exemption in the past, can they register retroactively and request a refund for previous F&E taxes paid? The answer to that question is yes. You can still request an exemption once you've registered your F&E account, or if you already pay F&E taxes, you can still request an exemption. We do just ask for patience because it does have to go through multiple channels of review before it's determined that it's approved, and then you submit a request to have the F&E 170 return that you previously filed has to be reversed, and then you can request your refund. So it does have multiple channels that it goes through before it's completed, but yes, you do have the option to request an exemption retroactively.
Yeah, that's real good then.
I would like to add one thing that as far as a statute goes, you can go back as far as a statute, but not beyond.
Right. Thank you.
Mm-hmm.
Okay, great. Another question that Steve had here is LLC registered and approved for a FONCE exemption in 1 year, then some property was sold. How does that affect the eligibility for the exemption? I would assume that the exemption would be for the prior year anyway. What do you think about that?
So that's a great question. And this happens a lot, especially with people that own multiple properties. So so it is possible. Just an example would be you own a couple properties, say in 24, you qualify for the fonts. If you sold one of those properties in 25, most likely you would not qualify for the fonts because the gross receipts from the sale of that property would need to be listed as non-passive income, and you would look at your total income, and you would have most likely you would not have 2/3 passive income. But the following year, if you only had the one property, then you could still qualify. You can go in and out of your exemption. But for the 25 period, almost any period that a property is sold, you're most likely not going to qualify due to those gross receipts needing to be listed as non-passive income. But you would have to list it properly and then look at the 2/3 income test to verify that.
Okay, great. I'm sharing my screen right now. I was hoping you could see my browser. There, we're just looking at our website. Can you guys see that? Andrea and Charles, can you see that?
Yes.
Okay, very good. I just want to make sure that I'm sharing properly. So just to let you know here, there's on our website, we have loads of information like we were talking about, like franchise and excise tax. when you come in and look at exemptions over here and the different things that we have. We mentioned fonts right here and the ways to get to different things, forms. And then you look at this one right here. What do we have here? This is the actual form. Okay, and again, there's the box that Andrea was talking about there. Make sure you check off on the final extension the different things relative to this form. We're not going to go through the entire form. That would be sort of crazy. But as you can see, there's a lot of detailed information on this disclosure of activity form that we were talking about earlier. Make sure you're very complete on that. Also, something that's sort of funny and not funny at the same time, it is really hard to read people's handwriting. So if you would be so kind as to be very careful in your handwriting or be able to produce this electronically in a way that we can read it, that would be great. Better than that, doing it on 10 tap, awesome. Yeah, that's what we really want. So again, all the laws and things are here in that actual form. So just wanted to show you that that was there. One quick thing while we're out here on the website, just to let you know, in our taxpayer education section, if you didn't stumble on this already, in our tax webinars block, you can see the information. Here's a link for the materials for today. And we will also have this event moved into our webinar library, which is right here. And it'll be listed here as the FONCE exemption along with a recording, and it'll be there later today or tomorrow. Okay. So thank you for your attention to that. So trying to see if we have any other questions that we want to talk about. Charles or Andrea, do you see anything that's pressing here from these kind folks this morning?
There's one about the initial turnaround time for the exemption. When how will you be notified? So, of course, as we approach April 15th, the due date, we are getting a little bit more requests submitted to our office, so processing time is a little bit longer for right now, but typically it's 24 to 48 hours for processing for exemptions. If the exemption is approved, you will receive a notice just notifying you of their approval. Also, if it's denied, you'll receive a denial letter explaining the reason of why the exemption was denied. Of course, there may be situations or information that's provided on your exemption request that may require an additional review. And if that is the case, I don't have an exact date or turnaround time for that. Is of course it goes through again multiple channels of review to determine if you meet the qualification. So that could be, the 2/3 income test, or maybe the property addresses have to be, of course, commercial. I mean, not commercial. I'm sorry, residential. Just different things like that that may require an additional review, may have an effect on the turnaround time for you. It usually is 24 to 48 hours during our non-peak season.
That's why it's really great to do this kind of thing right now, as opposed to April, because of that of the log jam, inevitable log jam. And we've done this for a long time, so we sort of know that. So it's just important to try to be as timely as we can be. So yeah, so they're notified. What do they get? They get like a letter, like in the U.S. mail.
They get both. They get a notice in their 10-tap account if they have a 10-tap, and they also receive a letter in the mail.
Okay, so if they send in a paper form, then clearly they're going to get an actual letter, right?
Right. If they don't have a 10-tap, they'll receive the letter. But of course, if they have a 10-tap, they'll receive both a paper letter and one in 10-tap.
Right, and just a little real world sort of situation here. When we send out mail, it's not like you putting something with a stamp on it in your mailbox. Okay, our mail goes through a very intricate process, and we would like to say, hey, you'll get that in a couple of days. It doesn't really work like that,
No.
guys. It takes a good while for that mail to get to you. I'm not going to even spend a lot of time talking about that, but it is somewhat difficult. Okay.
Right, so a 10-tap account is encouraged. If you have an EIN
Yes.
number, or if you're a single member LLC with a social security number, you can register your entity with a 10-tap account and get those letters much faster than, of course, you would in mail.
Yeah, absolutely. Absolutely.
Billy, I did run across a couple of good questions
Yes,
here.
sir. Go for
I
it.
apologize too. I just got access to the questions. So
Okay.
the first one piggybacks off of what I had talked about earlier on my example. And they were
Okay.
wondering if they didn't qualify in 25 due to selling the property. When they file their FONCE exemption in 26, would they need to file a new exemption? And the answer to that would be no. You could file a renewal. The only reason I would file a new exemption is if you actually changed exemption types. And I know we like to see that new box checked if you actually change exemptions. And then the other question I see here is it says husband and wife own a Tennessee LLC for commercial rentals. Do they qualify for the funds? My initial reaction would be no if it's truly commercial property. However, we do see duplexes and quadplexes zoned commercial, but due to them being 4 units or less and used for residential purposes, they do qualify. However, if it's a commercial business, a restaurant, barbershop, something like that of nature, or anything type of commercial activity like that, it would not qualify. The commercial rental income does not qualify, and it is listed as non-passive on the disclosure of activity page.
Perfect. Thanks a bunch, Charles. That was great. Okay. That being said, not there. I'm sure there's more questions out here that we probably won't have a lot of time to get to. Do you guys see anything else you want to hit on real quick? All
There's
right.
one about a final exempt, well, closing your business. So if you're closing your business, you want to just make sure that you still submit the exemption by the tax due date if you haven't been granted a federal extension. And there is an option on the F&E 183 that says final. Please be sure to check that box because that is the indicator to us that you're closing your business. And then we'll do our due diligence to issue your termination tax clearance letter, which is what you need so you can close out with Tennessee Secretary of State. Okay. You can submit the exemption after April 15th, but if you haven't been granted the extension, just be aware that you may be assessed a penalty of $200.
Yep. Great information. You know, we're all about trying not to charge that $200 penalty. That's for sure. We don't want
Right.
anybody to pay any extra money too. But just a little advertisement for closing accounts in general, particularly franchise and excise accounts. Make sure that on the franchise and excise tax account that you're checking these final boxes either on the FAE 170 form or the 183, the exemption form, so that we can close this down, just like Andrea is saying, because no matter what you're doing, we don't know that you're closed until you tell us that you have filed that final return for franchise and excise. Okay. We see literally thousands of notices that go out to entities about things that were not closed out properly. So we'll work with you. We'll do the best we can to help you, but to create or to help not to create a situation that you don't want to be in, help us help you do that by doing that properly up front. Yeah. Okay.
Billy,
Oh,
there's someone
sure.
asked if there was a maximum number of properties that you could own for the FONCE exemption, and there is not.
Okay. That's good to know. Awesome, y'all. Okay, well, with that, let me go ahead and make sure that folks have a way to reach out to us here. You can see all of our social media things here, different things like Facebook and X and things of that nature, but I want to make sure that everyone knows our email address, and which is, if we didn't hit your question today, make sure to send us an email. Our email address is revenue.support. That's the word revenue with a dot and the word support at tn.gov. And also our telephone number for general assistance is 615-253-0600. But for for franchise and excise taxes, it says registration, but we mean franchise and excise taxes. It is 615-253-0700. So that is a that's a great number to call because I know Andrea doesn't have anything to do. So if you want to keep her fully employed, you'll call her. Okay. I'm just kidding. I'm laughing. These people are the busiest people I know. And it is a bear. Franchise and excise tax is a bear. And it's one that we certainly appreciate people like Charles and Andrea and their expertise in these areas. They add a whole lot to what we do and trying to help our taxpayers out too. So we do want you to reach out to us and to ask any other questions that we may not have answered today, and certainly feel free to do that too. We want to also tell you about our upcoming webinars. We're going to be talking about obligated member entities for franchise and excise tax at the end of March 2026 on the last day, on the 31st. So make sure to join us for that. And then we'll go back into sales tax exemptions in April, which is always a hot topic. Sales tax being about 2/3 of the money that our department takes in. So it's a biggie. Our new business workshop for any of you that are new businesses or know anybody that is a new business. Our next one is April 8th. It'll be electronic as well. And we hope you can join us for that too. And you can reach us on our taxpayer education section of the website like I was showing you earlier. Okay. All right. Now, when we leave here in just a moment, you'll be directed to a survey. We appreciate your feedback. And so make sure to give us that feedback and let us know how we can help you. Any comments that you might have are appreciated. And then, of course, again, in red at the bottom, if you're getting CPE credit, you do have to answer yes to question number 4 on the survey, and then give us your name as you want it on your certificate so that we can provide that to you. Okay? Guys, any final comments as we wrap up today? No.
Thanks everyone for attending.
All right.
Yes.
Well, we thank you
Yes.
guys, and again, many thanks to Andrea and to Charles for helping with this month's webinar, and they're great. And thank you as participants as well. And with that, we'll go ahead and wrap up today's webinar. And again, we'll have this recording and information on our website very soon. So thank you very much, guys. Have a great day. Bye-bye.
Thanks.
Thank you.